All right, welcome everyone to the Trade Findings and Adjustments for Tuesday night, November the 19th. I was going to start off by saying, hey, guess where I'm at? But let me go ahead and share a reason why I do what I do. It's quite fun to be able to make a living off of trading the stock market and protecting people's money. Obviously, I found as I started, it's easier to do with more money. Less money is significantly more difficult. When you spread trade, you run the risk of losing big chunks of money. And obviously, collar trading is a way to protect your stock ownership and to beat the market on a consistent basis over a certain period of time. And that period of time is unknown. Obviously, we can't predict what the market's going to do. We've had an amazing run the last 9 years. So part of what I get to do is I get to, how do I say it? My time is my time. It doesn't mean that I still don't work 40 hours a week, if not more. But when I choose to do that work is based on my time schedule, except minus the down days in the market. And the up day in the market is a day off where I get to rearrange my schedule and work how I need to. A down day in the market obviously is a day that I have to be ready to answer questions. I have to be up to understand what's causing those down movements and be prepared to study the charts and our positions to see if protection needs to be added. I was going to tell you or have you guys guess where I'm at, but I know I've already told a couple that are here. Yes, tonight I'm in Huntington Beach, and a couple people have asked the why. My father-in-law, Al, is going to have a surgery, and I get to be helpful for them, hopefully, taking some evening shifts and making sure those nurses take care of him the way that they should. Pretty neat to have that opportunity and that they give me the opportunity to be of help. If you were to ask my little Taylor would kind of say, hey, just go fix up Papa Al like he's fixed up things around my house. It's pretty neat to see a 12-year-old care enough about his papa, his fixing things around the house, teaching him how to work and repair things. It was pretty impressive to me to see how important he cared about his papa. So that's why I'm here in Huntington Beach. Pretty neat to be able to obviously spend time, visit family. Yes, I might miss my family through some of Thanksgiving, but I think you just know that you get to do what's needed most. And because of my work, I have the opportunity to do that. So I hope that all of you, as you're following through here and starting to trade on your own and to make some of the returns on your own, that you can also be able to do that yourself. For those of you that are religious, send us some prayers, right? Send some prayers for Papa Al so that he'll be looked over. With that said, we had building permits and housing starts. And if I was to ask you guys, which one is most important? On the building permits and the housing starts, which one is more important? I ask that because $1,365 and housing starts came in at $1,314 versus $1,300. So out of curiosity, I'd like you guys to tell me which is more important, building permits versus housing starts. Building permits because it's up. I might have said the same thing today. Sometimes you talk about housing starts, right? Kevin, it's housing starts. 80% of the GDP is done by consumers. 80% of our national GDP is consumer-based on how they spend their money. Well, I'm sorry, I thought that was 60%. Well, it is 60%, but you can push it to 80% if you count home ownership. Building permits is business. As businesses grow, people have better jobs. It's a chicken and the egg scenario, right? It's a chicken and the egg scenario, and it really doesn't matter which one is more important. Both of them were up. Both of them look impressive. Building permits were much better than housing starts. I think it's that time of year. You're not going to see a lot of housing starts in winter. People usually aren't building homes in the winter. They're going to wait till spring and start then. Most people also won't move their children out of a school at this time. They also wait for most likely summer to come, and that's why we have such a housing boom at that point in time. So if that was the economic event, if I could ask you, what's moving our markets today? It's one word. Dave and Lance, those are 3 words. Maybe one of those words is it. Rich, Lee, what's moving our markets today? Interesting. Home Depot. I would have said, or China, because we had some China deal, right? But Home Depot moved our markets down today. It was pretty easy to see, but I'm going to show it to you in a couple different ways. Actually, you know what? I'm going to do it this way. Let me grab a pen. Home Depot obviously brought down the Dow Jones Industrial Average. They're only 31 or 36 stocks that make up the Dow. Not an important index. It's no one benchmarks or trades off of the Dow. It's a traditional index. S&P was down 0.06%. And nice to be up, 19,000 a down market. If I can make a point, we have 1.9 million of profit this year. And if I can go through, give me a calculator, 1981074 minus 11371,931 is equal to 9390. So let me write that down. 9390857. If we take 1981074 and divide that by 9390857, we're looking at a 21.09% return. Pretty much in line. The neat part about it is, because someone has asked, what has made you your money this year? It's Apple. Where's the year to date? It's Apple. Apple's the big winner. And if I could show you the big loser, it's still Baidu. Baidu hands down. Now there's some spread trades in there and there's some other stuff that's there, but pretty easy. Apple, Disney, Visa, Facebook, CVX, Bank of America, Zions are in there. A lot of little nothings, probably spread trades. Under Armour and Baidu are the big losers. So I was showing that to you with the understanding that one of the trades I like and that really stands out to me, that if I was looking at something to do, I would do it today, is actually, it is actually a trade from, it's a target trade, but is a longer term bull call. And a client has this in their account right now. As I looked at, I thought, you know what? That would be a really good easy to adjust, longer term trade to run through a Christmas rally. Again, you'd be doing it or placing the trade with the understanding that if you needed to adjust it, you're going to give it some time to adjust. But as I looked at this trade, a 110, 120 that right now would cost you $3.96 that you could put on tomorrow out to January 20 so that it gets through the Christmas season. It's a pretty good credit if you have to adjust. As I took a look at his trade, I thought, you know what? I want to copy it. I like the trade. It could go horribly wrong against you tomorrow, but gives you plenty of time to capture the short side and plenty of time to for all intents and purposes, to adjust it and to allow it time to come back. So if I took a peek at this trade, I don't want December 13th, I want January 20. We'd be looking at the 110s. Change it to a 110. I'd probably want to get up to 8 contracts, so I also would start off with maybe 2. Change it to 120. Pretty good trade. Pretty neat opportunity to make a pretty fabulous return. And you could make a lot of it as early as tomorrow after the market closes. Pretty sure that's when Target has their earnings. We should probably check, right? Oh, it's before the market opens. You could still follow this trade on through tomorrow. Dang it, that's why sometimes you have to do it before. If you look at a snapshot analysis, great maximum profit for a minimum maximum loss. It could be something that you could follow onto or with by adjusting it to a 115, 125. So based on the movement of Target tomorrow after earnings, what a neat opportunity it could be to have a pretty good return on a pretty simple trade. The neat part is you could follow it along tomorrow and maybe get out of it at the close. Kevin, why would you say that? Why would you think that? Why would you consider that? And really it comes down to the chart. If it doesn't move too much, it definitely has the opportunity to get back up to $115-ish. There's your 115 right there. And I think it has the opportunity to get up to 125. It all depends on how far it pops from move at earnings. We had I need to upgrade too. Wow, it's kind of a big jump. Guess it'll be interesting to see. If you don't like this trade or we feel we've missed it, you could always do a leap, a stock ownership leap on Target. Another option you could look for is finding out of the money. If it's at 110, I would really go out to probably a January 21. If it was at 110, I would probably start at a 115 or 120. Don't want to spend more than $1,000 a contract to take the place of $12,000 of an investment for the stock ownership. So I would really cut this down to one contract and off I would go. kind of an interesting way to follow Target after their earnings where they prove themselves, and to run it through a Christmas rally, looking at getting out of the trade no later than January, beginning of January. It would be a pretty interesting opportunity that people have to participate in a retail run towards the end of the year, and to do it for $1,000 versus $12,000. Again, if I took a peek at that one, 1,000 divided by 12,000, you're looking at 8.3% cost of the stock. That might be your risk. Obviously, you could get out of it at 50% stop loss, have 4% risk, and keeping 4.3% of the money that's available. But a great opportunity to follow a stock after its earnings that should have a ridiculous run into the rest of the year. And again, their chart shows that, right? If you take a quick peek at their chart, their last earnings literally went right to 110 or 100. We're sitting at 110 today, even 10% higher. If we got that same amount with the Christmas rally, you'd be looking at them getting to at least 125, which could be a pretty good run into the end of the year. Any questions about the longer term bull call or a leap long call option on Target? You would be following it after earnings, yes. It would be an after earnings trade. Looks like it also paid out a dividend today. What was its dividend payment? 66 cents. That would be kind of interesting. All right, guys. Hey, appreciate having you here today. I'm going to get this posted as quickly as possible. Any questions you guys have? If not, let's follow Target. Let's see where it runs. Obviously, if it blows it, you're going to hold off on this trade. If Target does not run the way that you expect it to, which I guess that's a good point to bring up. Kevin, what if it doesn't knock it out of the park? What would you do? What would you be looking at? I would still be looking at the trade, but I'd be looking for it at a support level, which is probably down around 100. If you saw it go down around 100, you'd have an opportunity to buy in a little bit cheaper. You could do a synthetic collar trade and ride the put. And again, if it blew it, I would not be putting this on. I'd be looking for it to find the bottom around 100 and then make a run through earnings back up to 110. So it'd be doing nothing more than filling the gap. Good question. Good question. Anything else? All right, guys, I'll look forward to seeing you Thursday morning. I know some of you may have put the covered call on, but here's an option opportunity to do on Target. And let's see where Target goes. Talk to y'all on Thursday. Bye-bye.